Hi, I'm Jamie with The Saving Secret, where I help you be more intentional with your money. If you're new to the channel, please hit the subscribe button. If you notice today, I'm not in front of the whiteboard, I'm on my computer. In my last video, I walked through the basics of how taxes work. And so today I want to share with you a tax tool that I've built that can help you personally understand what your tax implications are. Before we get started, please click on the description of this video to find the link. Please click on the link, and this is where you'll be brought up to. So if you look here, it's an Excel workbook. So you're welcome to download it, and we're going to go through this. So go ahead and hit the download button. I'm on a Chrome browser on a Chromebook, so I'm going to use the tool in Sheets. So it'll still work. It's just an Excel file. So once you click on that, you'll be driven to this workbook. So on the first page of the workbook, if you're new and you haven't been familiar with the Saving Secret, I've done several different videos. Please check out some of my other videos that I've done that can really help you with your financial information. And again, if you haven't subscribed already, go ahead and click that subscribe button. So the rest of the tabs, the first tab, it shows your pay stub, and that's where we'll get started. And that gives you a little bit of information there. If you notice, there's little blue areas, and they'll be on a couple of different tabs. Those are areas where you're going to fill in your information, and then these other areas are calculated formulas. I've made it so that you can actually click on them, the formulas, to understand what's going on. The federal tax tab is a tab that, again, has a couple of blue areas that you'll need to fill in. It also has the 2019 tax information, and it also shows, which I'll get into a little bit later, the tax table of truly how does taxes work. And so not only will this tool give you necessarily what your taxable income is and what you owe or what you'll receive back as a refund, but it also walks you through the process and shows you the math behind things, so you can not just get the answer, but you're also comfortable with understanding how taxes work. And the last one is Arkansas taxes. I'm from Arkansas, so I don't actually have any inputs over here, but again, it gives me my taxes. If you're from Arkansas, you're welcome to use it. Obviously, if you're not in Arkansas, unfortunately, this will only apply for your federal taxes. All right, so to get started, let's go to the pay stub. So like I said before, the areas in blue are the areas you're going to want to fill out. So to get started, go ahead and have a pay stub handy. And again, this isn't attached to anything. Once you download it, it's your file. Nobody will see your private information. What I've done is I've put in a couple different examples on Paystub. So the first spot to put is the date. That just is more of a placeholder as a reference for you personally. Another one that's extremely important is to figure out how many more pay periods do you have. Some people are paid monthly, some people are paid every other week, some people are paid twice a month. So understanding whatever pay stub you're looking at, how many future pay periods are you going to have? The pay stub information is really broken out into three pieces of information. The first piece of information is your income. So this could be income that you've received throughout the year. It could be, if you're a salary member, management. It could be what you've made, what's your salary for the pay period, and also what you've made year to date. So essentially what the income column does is it adds up. We'll look at it. This is the number you're trying to find, the total pay for the year. So it adds up all of these numbers for the year, and that'll be your projected for the year. And so what is important about this is your salary. It takes into consideration what you've made for your year to date, and it adds that to your pay periods multiplied by how many pay periods you have left. So if you look at the formula, what it says is you take your total year to date and you're going to add that to a formula. It's a y equals mx plus b for all those algebra teachers out there. Shout out to my mom. So you use your y equals mx plus b. So Your plus B is your year to date. Your M is figuring out what your pay period is, and your X is how many pay periods you have left. And that's where you get your projected salary for the year. So again, all the information you're going to find here on this total pay period, your projected tax amount, and your yearly deductions, that's all projected based on how many pay periods you have left and what your pay period and what you're making per pay period. So again, you look at the tax columns, you're going to want to put in your federal taxes, your state, and your year to date. So all those information. You'll also see on your taxes payroll, which is your Medicaid and Medicare. That won't be needed for the purposes of this exercise. But you'll put that information here as far as what you pay for federal and state. Then you might have different deductions. So different deductions are important to include because some deductions help reduce your AGI, your adjusted gross income, and others will not. So on here, I've included specific items that will reduce your AGI. This isn't a complete list. You'll have to check if you have other items, but these are ones that are not included. Life insurance, dependent life insurance, short-term disability insurance, long-term disability insurance. But if you're contributing to a 401k, if you have medical, dental, vision insurance, your health savings account, all of these are taking out pre-tax. So this helps lower your AGI. So the whole point of filling out your pay stub information is to help get you your AGI information. And so what is your AGI? So what your AGI is, if we look over here, what it does is it takes your total salary for the year and it takes that and it subtracts specific items that are reduced your AGI from specific deductions. So it takes all of these and subtracts it out, and then it'll round that number for you. So you do this if you have multiple pay stubs, you fill out this information in blue, and then you'll click over on the federal taxes link tab. So then when you click over the federal taxes, this is what you're given. So the information we just populated, if you did both pay stubs, will show up here. Then you would look at this and say, do I have any other income that I need to include on my, to get my total AGI? So you might get interest, you might have another W-2 form, you might get dividend payments. If you're retired, you might have some retirement savings that you've taken out that you need to include. So you fill out this basic information and that gets you your total AGI. And that's an extremely important information. Another thing on this tool that's important is when you're filing taxes, it's important to understand what is your filing status. There's 3 statuses. So when you click on this drop down, everything is dependent on whether you're married, you're head of household, or single. For the purposes of this example, we'll be using the married tab. So you click on the married tab, and then that's the form of taxes that we're going to be basing it off of. So over here, this is a basic 1040 form, and I really try to make it as simple as possible so that you can truly understand how taxes work. The goal of this is not to just spit out an answer for you. Yes, that's what it does, but it also helps you personally understand how taxes work. Taxes don't need to be complicated, but a lot of times we get scared and we want to make sure that they're done correctly. But really, it's understanding with a little bit of knowledge and a little bit of basic math, you can figure out taxes. So you put in your total AGI over here on your 1040 form, on your little mock 1040 form that I have here. Then what you're going to have is you're looking for your deductions. So in order to figure out deductions, there's different things that you can include. I haven't included every single thing that you can deduct. Obviously, you have childcare and some other things that you can include as deductions. You're welcome to use this as a reference. So one of the changes to the taxes is there's something that's called a max SALT, which is state and local taxes, that you're only able to have 10,000 that you're able to deduct. In this current example, this is under $10,000, so it's not really big of a deal. But let's say that you did have over 5,000 in your property taxes. If you notice, the tool, it'll do is it'll cap it at 10,000. So even though these state and local taxes are 10,362, it's going to cap it in 10,000. So that's one of the adjustments that was made to that. So it's important to understand that you're only able to get a max of 10,000 there. But if we go back to this, that is why that's capped. And so then you take your SALT, and you can take mortgage, charity. If you have some other ones, like I said, childcare, you take these and you sum them up, and that's your total deductions. And so that is what you can use for your total deductions. But then you look over here and it says 24,400. Why isn't it taking the total deductions that we did? Well, if you click on this, what it's doing is a calculation that says, hey, your total deductions is 23,582. However, the standard deduction for someone who is married is actually 24,400. So again, if you look at the tax information table, the standard deduction for those who are married is 24,400. So 24,400 is greater than the 23,582. You're going to want to put that in. So that's where that is. The next line is if you have a business, there's a line item that's called business income deduction. For many of you, if you don't have a business, you can ignore this step. So then simply for the net taxable income, what you're going to want to find out is you simply do some basic math, is you take this number and you subtract them. The only reason that it has some interesting formulation here is if for whatever reason, if your business income or you get some kind of deduction that makes your income zero, you can't have a negative taxable income. So it always reverts back to zero. So for example, if this was $80,000 of a business income deduction, your taxable income would not go negative, it would just merely go to zero. So for the purposes of the example, we'll just leave it here. So your net taxable income is $78,000. So in order to find this net taxable income, you're going to need to figure out and look at the tax table. So that's what you're required to. So let's see what the tax is. It gives you the answer of 89.93, but how did it figure that out? So again, the purpose of me making this tool was not to just give you the answer, but to really help you understand how taxes work. So let's go down to the tax table. So if you look at this number, 78,179, that comes into your net taxable income. So then it goes over here and says, okay, your start tax bracket is 19,400, and that's taxed at 10%. Well, how did it know what your start tax bracket was? So again, looking at the tax information over here for married, what you're going to do is you're going to find where your taxable income is, and you're going to look at figuring out which level are you not quite larger than. So right here, you're close. So if you had $78,950, you would actually pay $9,086 in taxes. However, you're slightly below that number. So what you do in order to figure it out is this is your lowest starting point, and this 19,400 is your start tax bracket, and that's at 10%. So whether you make this number of 78,179, you make 20,000, or you make $1 million, every single person that is filing under married will pay for their first 10%. For the first $19,400 in their taxes, they're going to pay it at 10%. So then you would owe $1,940. Then what you do is you subtract this number from the start tax, and then you get the rest of the income. And then you figure out, what is that rate? Well, if you look over here, the rate is 12%. After the first is 10%, the next one is 12. So then you take this number and you multiply it by 12, and that's where you get this number, which is 7,053. You add those two together, that is what your taxes are actual due. So again, just because we're in a progressive tax system and the math is a little bit different, it's not as confusing, The best example, again, I know how to share is what I shared earlier, is regardless of whether you make $20,000 or you make $1,000,000, both people will pay 10% taxes on their first 19,400. So that's basically how taxes work. So then you get that information and you're going to plug that in there. So that's the taxes. That's what you owe. Then there's something called credits, and there's a couple different credits, but for the purposes of this tool and example, it's really just based on how many kids do you have. So you punch in the number of how many kids do you have, and that is the credit you receive. For every child that you have, you receive a $2,000 credit. Now, if you make income over $400,000, if your AGI is over $400,000 and you're filing for married, that deduction is going to be a little bit different. You're going to talk to a tax professional. If you're filing under anything besides married, the total AGI to get the full benefit is $200,000. But for the purposes of this example, you meet within the goals. So you put in how many kids you have, and that's what your tax credit is. So then you take this number, your taxes minus your credit, and that's what your net tax is. But what's great about this tool is based on what we performed as well on the pay stub, you've already paid taxes. So if you look here, this says that you've paid taxes. So what it did was if it came back and it added the two pay stubs for your projection for the year. So let's go back to the pay stub tab. And what it did was it added the federal, what you're projected that you were going to pay for your federal, as well as for the first pay, for the first one and for the second one. So it added these two together to give you your projected what you would have paid for the year. So again, if you look at your taxes paid, you would have paid $10,814, but you only owe $6,993. So you'd be receiving a refund of $3,821. So what you can do is if you don't like this amount, if you want more money in your current pay period, what you can do is make adjustments through your W-4 form and then redo this tool after the next pay period and see how your adjustment will come out. Obviously, the goal for this is you want to get this, your due and refund, significantly small. So you don't want a large due because you might have extra penalties, and you don't want a large refund because you're giving essentially the government a tax-free loan. The last tab on here, which might not apply to some of you, but I wanted to show you it for the purpose of this example, is after you go through all that, it actually gives you your Arkansas taxes. So again, goes through the same basic exercise, and it shows you where you land for your taxes. Again, if the number was positive, you would owe money. If it's negative, you'll receive a refund. And so obviously the tax information for your state's going to be a little bit different, but there's really no information to edit on this page except for your filing status. So this is the Saving Secret tax tool for 2019. If you felt this information was helpful, please give it a thumbs up. If you have questions, please leave them in the comments below. Thank you so much for watching and have a great day.